So I got a couple of comments this week of basically people asking when is a good time to sell your stocks, when is a good time to cash in on some of the profit, especially when a stock runs up quite a bit in a short time, basically like we've seen with Tesla recently. So there's a number of aspects to this question, so let's go ahead and try jump into it in this video. And just before we get into it, if you could take 1 second to scroll down and drop a like on this video, it really would help out the channel. It helps push it out to more people who maybe haven't seen the content before. As I've mentioned in previous videos, we're aiming for 5,000 subscribers by the end of the year. So as the saying goes, a person never went broke by taking profits. But of course it's not as easy as that. People want to find the right balance between pulling your money out too early or completely missing the chance to pull your money out and ending up in a loss. So here's what I do, and keep in mind this is not financial advice. Make sure you do your appropriate due diligence when it comes to any investment decision. So for example, Tesla, I had a price target for Tesla of $1,200 by mid-2022, and in fact over the last 2 weeks it's managed to run up over 30% in such a short space of time, and it has actually hit that $1,200 price target. Aside from that, it actually did drop about 10% today at the time of recording this video, so a bit of bad timing, but we'll continue with the example anyway. So when Tesla hit that $1,200 price target, it probably would have been a good idea for me to take a little bit off the table, seeing as it hit it much earlier than I expected, and in them situations you're almost definitely going to see a pullback. But anyway, the reason that I didn't do this and I didn't sell much of my Tesla stock is because even though I did have a price target for 1 year's time, I didn't really have an intention of selling Tesla at that price target. In fact, I'm hoping to hold Tesla for about 5 or 6 years if at all possible, maybe even longer, so I don't really plan on selling much in the short term unless I can do it for some tax benefits. So basically what I'm hinting at with the Tesla example there is you can have price targets for your stocks, but that doesn't mean that you're ready to sell your stock at that price. So for me, it's important that whenever I make an investment, I establish whether it's going to be a bit of a short-term trade, maybe between 6 and 12 months, or if it's just going to be one that I just continue to hold, and whenever I see dips, it's just a chance to accumulate, and I'm not really too worried about selling. So let's go ahead and formalize this process a little bit, and let's call it point 1, decide how long you're going to hold the stock for. So let's say that you buy a stock, let's say for example Apple stock, currently trading at about $150, and you just think in the next maybe 1 or 2 years it's going to have a good run up, but you're not really too bothered about holding it in the long term. So if it's currently trading at $150, you may say at $180 I would be more than happy to cash out on this position. But if in 6 months time, which would be about 1.5 years earlier than you had anticipated, Apple stock has a big run up and hits your price target of $200, try not to be too greedy here and cash in on some profits. So rule number 2, I guess, is don't be too greedy and cash in on your profits or take some off the table whenever your price target is reached. Now let's take a look at the third point, which is where the fundamentals change in a company. So let's take a look at Tesla again, for example. I often reference Tesla because it's my biggest holding. But let's say, for example, they decided to shift away from EVs and they decided to go with hybrid models or something like this, or they decided to bring out dealerships instead of their online kind of sales that they do at the minute. That for me obviously would be fundamentals changing, and I know it would never happen, but I'm just trying to give an example of fundamentals changing. So for me then, I would lose a lot of conviction in the stock and I would most likely cash out all of my position if that did happen. So the third step that I have is if the fundamentals change for the worse, it may be a good time to sell your position. And the fourth rule that I have is try to avoid investing in stocks which you don't know that much about or that you have little conviction in. So let's say, for example, you come across a stock that's being talked about on Reddit or Twitter or YouTube, for example, and the people that are talking about that stock think it will 2x in a short time. So you don't do any more research than that and you just go ahead and buy that stock. But then a week later it starts to drop by maybe 10% and you don't know enough about the stock, so you're starting to panic, and then you're starting to do your research into the stock to see have you made a huge mistake, and often then you will end up selling out of the position. So instead what you should do is when you do get a tip for a stock or you come across a stock that a lot of people are talking about, do proper research into the stock, set your price targets, and if it does dip and you've invested in it, it should be an opportunity for you to increase your position, because as I said, you shouldn't invest in something that you don't believe in or know enough about. And then I do have one final rule, I briefly mentioned it, but tax benefits. So for example, in Ireland you get €1,270 in capital gains tax exemption each year, so it would be an idea for me to sell some of my stocks that I'm in profit on to cash in on that tax exemption in order to offset a tax bill further down the road. So if you are watching this video, hopefully you have a bit of a long-term investor mindset like myself and you're not too worried about selling in the meantime. It's all about picking the correct stocks which you have a lot of conviction in for the next 3 to 5 years plus. And if it has a run up in the short time, that's absolutely great, and if it has a bit of a drop, you have enough conviction in them to buy the dip. Anyway, there is no shame in taking some profits if you don't feel comfortable with the amount of money you have in any of your positions. If you can't sleep at night, you definitely have too much money invested into it, and as the saying goes, don't invest what you're not willing to lose. Anyway guys, hopefully that helped. If any of you guys have any strategies for how you sell your stocks, let me know in the comment section down below. If you did enjoy this video and could take a second to drop a like on it, would really help out the channel. And if you're new around here, make sure you do subscribe as well. Thanks for watching guys, and I'll catch you in another video.